This is AgriTalk with the AgriTalk video supplement for the show of, Monday, January 4th. I'm going to be covering three markets in the show and in this video. March, actually the grains. March wheat, which will include Kansas City wheat, because I think it's providing sort of a confirmation for bullish continuation into spring trade. I'll get to that in a moment. Also, the March corn and March soybeans. So the three primary grains. Let's start with, well, before I jump into this, if you've obviously gone to the website, if you're watching this video, please fill out the free trial form if you haven't had a free trial yet, or if it's been at least 6 months since your last free trial. Provide your first, last name, phone number, email address, of course, and you'll get 2 weeks of my daily analysis in all of my markets uninterrupted. You'll even get a consultation phone call if you want to talk markets, if you want some advice on what you're doing with regard to your particular hedging or trading needs. And that's that. I don't fill your inbox with all kinds of marketing emails, and I don't share your personal information with anyone outside of the organization. So let's jump to the wheat market right now. This is the Chicago Board of Trade wheat weekly continuation chart. All these charts I'm showing you, by the way, are weekly continuation charts. In other words, they roll with volume. Right now it's the March contract. This is March Chicago Board of Trade wheat. And the Chicago Board of Trade wheat, you can see this sort of long-term saucer bottom that's very textbook. The only question is it's difficult to trade these if you're a near to midterm trader. Long term, there's no question this market has the potential here to rally. And I've been mentioning that holding above this 561.5 speed line, which is a trend defining speed line, holding above it does keep 754.5 in reach this year, 2021, a possible summer 2021 high. And that all remains in effect. The bullish tendencies of this saucer bottom remain firmly intact above 561.5. I don't think we're going to see that level anytime soon, but if we do see it over the next month or two, in other words, say by the end of February, 561.5 is a great area to buy into, to lift any hedges, because from here we can round back up and continue higher beyond those recent highs within a matter of months. But we're not there right now. In fact, right now, from what I can see, now this is the Kansas City Board of Trade wheat. This is the March contract, same type of chart, weekly continuation chart, rolls with volume. When March is up and over, May will reflect on this chart. 587.5, we settled above this formation clearly last week. Now the markets, this is Monday morning, I'm actually doing this. The markets, all three grains have rallied to significant highs and have come back significantly within just an hour or two of the open. But nonetheless, the March Kansas City wheat finds solid support at 587.5 the entire week. And this level is dropping only ever so gradually to 587.25 by later January. It is an area that can contain selling really into spring summer trade, because above 587.5, and this is just a larger chart, very similar to what we saw in the Chicago Board of Trade wheat, where you had 754.5, you've got 768.25 as I think a realistic target. Now there's obviously some stair-step resistance levels along the way. This isn't going to be a straight shot. This is always big picture. I'm always painting the big picture typically. You're not really getting the 1 to 2 week time frame from me. You're getting 2 to 3 months out and beyond. 587.5, a floor of support for KC wheat, and above which 768.25 is in reach as a possible summer 2021 high. If we close the week back below 587.5, then this buy signal has been neutralized, and we should at the very least return into a more consolidation framework, which we've seen really since October. We'd fall back into this. Now, whether we would continue south aggressively, I will follow up with subsequent analysis on the show if we close back below 587.5 March Kansas City wheat. That's all I'm going to talk wheat. Let's jump into corn. Corn posted a significant buy signal last week. It didn't even hesitate, really, at this significant zone of resistance. There are two things here. They're 10 cents apart this week. This is a weekly continuation chart. volume-based rollover that presently reflects the March 21 contract. And, support begins at 465.5. It's this long-term, really a 6-year channel top. And we have a trend-defining one-third speed line that's projected off that 2012 all-time high, the August 2012 high. What was that? Excuse me. That was 849 even. Anyway, the speed line is dropping at a progressive rate. It's at 455.5. So you have a 10-cent range of support right now, and this will pretty much hold tight through January. It will change ever so slightly, but it still is a zone of support that if the market breaks into it, it tests it, can be bought on the longer term time frame, because above 465.5, I am anticipating there's some stair steps on the way up, but ultimately, as a possible summer 2021 high, 651 and 3/4, descending 2/3 speed line. Along the way, we have 536 and 1/4 as a significant low that was placed in 2012 before the big high was made. And then, of course, you've got 579 even, which is a 50% retracement from the 2012 high against the 2020 low. And what I like about this, you can scroll a little forward, you can see there's a whole series of lows here in a former consolidation area that goes back into 2011 and 2012. And so 579 even, I think, is right now, with the vertical move that we're seeing right now, I think it's a realistic kind of a 2 to 3 month objective. 579 even in reach as we continue into March, April, where we could certainly top out for a month, possibly through spring. From here, who knows how far south the market could roll. I'll be covering it then, obviously. But just know that ultimately I think there's a decent chance we'll actually settle above 579. I don't have it illustrated here, but one of the target mechanisms that I use, one of the strategies I use, is I take a look at this channel structure that we settled above, this horizontal channel structure in here. And if we settle above any horizontal channel structure, you generally reduplicate or double the width of this formation. And that puts us into the 620s right now. I don't have it illustrated, but a full channel extension, I call it. An extreme form of that is up here in the 620s. That's one of the reasons why I'm leaning on the 651 and 3/4, 2/3 speed line. And by the way, with regard to speed line analysis, if you close above the descending 1/3 speed line, your target, in very textbook basic fashion, is the descending 2/3 speed line. And so this is an objective now. Whether we test it in 2021 or in 2022 is anybody's guess. But as long as we're trading above 465.5, this market remains bullish. There's no good reason, in my opinion, to be aggressively hedged. You should, if you are hedged right now, I'd consider lifting hedges in the 450s, 460s. If we close the week below 455.5, then all bets are off. This market should continue south. And quite honestly, I wouldn't be surprised to see the 360s once again within a matter of several months. But we are not there. This is a bullish market above 465.5. Let's finish with soybeans. Nothing really new to report on soybeans. We've had a series of buy signals that I've been talking about. The first was in August above this descending channel top, and that initial target was this formation here, which we moved through, settled above without even hesitating. And so that put us in a second phase of bullish activity, which we are still in the midst of and nearly completing as of this morning. This formation at 1138 and 1/4 is solid long-term support. I don't expect to see it anytime soon, but we did close above it in early November. At that point, it elicited what I consider to be a 3 to 5 month target at the 1373 and 1/4 descending 2/3 speed line. And it's taken about we haven't tested it yet, but we're 2 months into this secondary buy signal. So one of the crossroads last week was having closed above the 50% retracement from the 2012 high to the 2020 low. The 2019 low. That's a typo. 2019 low at 1290 even. So right now, 1290 even, if you're talking near term, decent weekly chart support, able to contain weekly selling pressures, and above which we should, over the next week, 2 or 3 at the most, test 1373 and 1/4. 1373 and 1/4 can contain buying into spring and even summer. And from here, we can fall back into the 1130s again within several months. But I will say this, if we close above 1373 and a quarter, we have yet another bullish phase, yet another buy signal. We've had two significant buy signals over the last several months from the August onward. And if we close above 1373 and a quarter, I'm going to give this another 3 to 5 months. This will put us into spring, summer once again, 1661 even, able to contain buying through 2021 if tested. But once again, it only becomes an objective if we close the week above 1373 and a quarter. Until then, the high so far, 1349.5 Monday morning. That's, it is 24 cents away or so. We almost came close to testing it, not within 1%, but 1% would be roughly 1360 or so. And so we're getting very close to it. And once we test this market can grow tired, overbought, and fall south into the 1130s once again within several months. That, I believe, is all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.